Today on the show, I have the pleasure of speaking with Minesh Bhindi. Minesh started his real estate investing career way back when he was just 16 years old, helping his dad negotiate and sell real estate. Now, over the years, he's helped many real estate investors buy over £20 million worth of property, and he now is a public speaker and invests around the globe, and he teaches people on how to buy gold, silver, real estate, and stocks as income-generating assets. His clients are in 46 different countries, and they have over a 92% success rate with his particular program. His focus is on long-term investing combined with cash flow. Simple strategies that work for everyday people. I'm really excited and pumped to have him on the show to share his incredible insight and what he does with us. But enough out of me. Let's get him out here. G'day, Minesh. Welcome to the show. How are you doing today, mate?
I'm very well. Thank you so much for having me. One thing I got to correct is the £20 million worth of property was when we were doing physical deals between when I was 16 and about 19.
Got it.
So
got it.
Much more now, but that was during that period of absolute haywire in London.
Right. Well, I'm sure we'll get into that in a little bit, but I'm really interested because we're talking a little bit in the green room before we press record here about where we're going to go with this show today. And you are from the United Kingdom, but tell the listeners where are you dialing in from today?
I'm in Bogota in Colombia.
Nice,
right now.
Nice. And what are you living down there? You're down there for a tax haven? What's the point? Holiday?
No. I love Colombia. I started coming here maybe 2.5, 3 years ago because a friend of mine moved here from Chicago, and I love it here. So I decided to come and see if there was any other opportunities here that I could get involved in. So yeah, that's pretty much why I'm here. I can manage my entire portfolio from one of these. So it's like,
Well, mate, with all that being said, do you want to rewind the clock and tell me actually how you made your first ever dollar as a kid? And I don't know if it was with your dad buying and selling real estate, but did you have any jobs prior to that to understand the value of a dollar?
No, I never had any jobs prior to that. I, little things like selling SIM cards and this, that, and the other in school, but I never had another job. I've never actually had an official job. The closest I got to a job was work experience, and I realized I never ever wanted a boss. And so that 2 weeks of work experience. Oh my God, it's bringing back nightmares right now. But that's as close as I got. I really learned the value of a dollar through the 2008 market crash. That was for me understanding, okay, what money's worth and things like that. That was my way of figuring it out.
Got it. And so maybe walk us through the upbringing that you had, because I mentioned in the bio that your dad was involved in real estate investing. So clearly he's been a very influential part in the success that you've paved through to today.
Yeah. So my dad was always, ever since I can remember, my dad's always been involved in some form of business, and real estate was always a part of that. And when I used to always watch him, but when I was about 15 and a half, I was watching him particularly negotiate a deal that looked like he was having a tough time negotiate this deal. And it was on loudspeaker, and he's in the living room, and I'm standing by the door, and he's negotiating this. And I stood there, and he put the phone down, and I was just sort of smirking, as arrogant smirk on my face as you do as you're 15 and a half years old. And he said, what are you smirking at? And I said, I don't know why you're so stressed. That looks easy to negotiate. I have no idea what you're so stressed about. And luckily, instead of telling me to screw off, he said, well, show me then. Show me how easy it is. And then I had to sort of figure it out. So all of my learning has been a just-in-time sort of learning model. And it's sort of figuring out the goal and then going for it. And that's what has really helped me, I think, along this way. And I had zero idea of how to purchase a property, who you needed to talk to, what a lawyer was, what a mortgage broker was. Like I had zero clue how to talk to these people, and I had to figure it out at about 15 and a half, 16 years old.
And so walk us through that period of learning and into some success in terms of doing your own deals. What did you cut your teeth on? What sort of properties were you buying in the United Kingdom for all those US listeners out there that might be a little bit different to what they're buying today?
Yeah. So what I realized that I realized very quickly that I was not able to empathize with someone that was in a desperate sales situation. Like at 15 and a half, 16 years old, you just know, coming from a, upper middle class family, like you cannot empathize with that in order to get the right deal and get the trust that you need to get that to happen. So what I found was that bullying property managers was more fun for me. And so my instantly grasped onto new build developments that were sitting there that weren't sold, and walking in there and bullying property managers that had to hit particular numbers, and getting really good deals on, say, 18 units out of 30 that weren't sold. And because I had a detachment to it, being 16 years old, I knew that if this deal didn't work out, my life's not going to change. I still got to go to school. I still got to do my homework. And so having that detachment helped in negotiating the deal, because I could just walk away. And so quickly I started getting better deals than anyone else was getting. And that emboldened my arrogance at that point, to just go out and keep doing that more and more and more.
And I assume for those people who are listening, buying 18 units out of surely would have been a condominium project, right? Is that what it was?
Yeah.
For new build?
Yeah.
So talk to a little bit of how you're structuring that at 16 years of age. Like, how were they taking you seriously? This snot-nosed kid coming in saying, "I'm going to buy 16 units out of the 200 or whatever it was."
Yeah. That was the secret, because I used to do it all over the phone. I don't think I ever met a property manager. No, once I did, but by then I was like 19 years old, and we'd already done 2 buildings. So it was like, it was a shock, but it was, results are now speaking rather than anything else. But yeah, no, I spoke to them over the phone, and we were basically doing no money down structures. So you would go out. My goal is to buy £100,000 property for 70,000, and buy that with cash, and on the day of completion, refinance at 90% of 100,000. So in essence, we were walking away with a very low interest loan as a cashback on the day of completion, and with some equity in the property as well. And obviously then, as we were packaging it and selling it to the investors, we had furniture packages, everything else. We had the lawyers on both sides. We had the bridge financing, we had the mortgage brokers, et cetera, et cetera.
So you were short-term holding these to an end investor who'd buy it for £120,000, right?
Not even that.
Right. Okay.
Not even that. We were basically providing the bridge financing. And the thing was that back in those times, you had the ability to instantly refinance a property when you completed on it. So we would bridge finance it at 70,000 and instantly refinance it at 90% of 100.
With the end investor as the buyer, correct?
Yes. So we would lend them the money. They would buy it in cash. They would instantly refinance, and it would all happen on the same day.
And so tell me what was your special sauce in terms of why were you finding these other buyers that the property managers were struggling to move this product?
I could, again, I think it was just the arrogance of being able to get the deal that helped with actually selling the deal. And when people realized, one of the things with me was I used to actually negotiate good deals. So I didn't have to bullshit around the fact that, didn't have to bullshit selling the deal. So I would break down the numbers and it would just make sense. And so it was very easy to sell. And I think that's one thing that I realized very early on. Selling is super easy when you're not selling bullshit. If you can, people inherently can recognize the truth and can inherently recognize a good deal.
Right. No, completely correct.
Yeah. So I think if you can get the numbers right and you can get them to look good on a spreadsheet, that's the wrong way of saying it. If you can get them to look as they are and it looks good on a spreadsheet as they are, then I think any savvy investor would bite on the deal. Like it just makes sense.
And so give a bit of a context for the American listener who's listening into the show, the difference in the real estate markets in the United Kingdom and America. I've spoken about the difference between Australia and the United States, but what type of deals are you doing, and what does the investment horizon and landscape look like in the United Kingdom?
Yeah, right now, I mean, it's a little bit in this pendulum swing because of Brexit, so we don't know what exactly is going to happen, and it's been there for 3 or 4 years. So it's really taking a toll on the market. I think the market should be much higher in the UK. than it is right now if we had certainty. We don't have that. Hopefully, with the new prime minister and everything else that's going on, we're going to get some certainty and some more investment flooding into the UK. The US is typically, it's where I invest now. I don't buy any more property in the UK at this point. I like the US.
Why is that?
Well, I like the US, and I like the way that I can use REITs in the US to generate cash flow on my property, as well as, walk around with my entire property portfolio on one of these, right? So it just becomes easier for me to manage. I don't need to talk to anyone, and I still get phenomenal rates of returns. And I like the diversification as well. It's REIT is diversified everywhere across the US, across all different sectors of real estate. But if I was doing traditional real estate and traditionally buying the physical property, I would still do it in the US, simply because of the ease of financing that you have. The fact that you can get a 30-year fixed rate mortgage is, I wish we could do that in the UK. That would explode UK real estate prices if we could figure that out.
That's so interesting, because I say very similar things when I talk about Australia. And Australia is obviously still part of the Commonwealth and is on Commonwealth law and British law, but has still some of those hang-ups. And when I always compare the United States to Australia, at least, I always try and get people to think of the amount of tentacles, of lending tentacles I talk about here in the United States. There's thousands of different ways of getting lending financing. In Australia, there's maybe 4 or 5 major banks, and that's it. And they've got the market tied up, and what their terms are their terms, and that's all there is. So it's so interesting to hear someone else talk about the struggles and the beauty of US real estate financing that is available. And a lot of these listeners are probably listening to this show understand that we have a different outlook on where we come from. So knowing what's in your backyard in the United States, get off the fence and freaking go do something. So
absolutely, I completely agree. I mean, there are probably people listening to this going, "Oh, the US can't be the best place to invest." Trust me, it is the best place to invest in real estate.
Right, and it's got and the reason why is not just the financing, but it's also to do with the population. It's also to do with how each state acts like its own little country. It's sort of like a mini Europe in its own sense.
Let's not go that far. Let's not go that far. It's not as screwed up as Europe is. Let's not do that. The US is in a much better state than Europe.
Right. Tongue in cheek, I always like to say the United States loves to get behind the United States when it comes to the Olympics. Every other time, it's like, I'm from California, you're from Texas, I'm from Florida, piss off, So I say it with tongue in cheek. I say it in a jovial way. But so talk about that coming to America type of investment and how you transition the business from UK. And actually, one question, we'll rewind back. What happened in 2008? What lessons did you learn? Because you said earlier in the show that you made some mistakes, or it really towered you up. What happened? What were you doing that when the crash hit, that you had to either pivot or change or lose money, or what happened?
Well, I was lucky because after I did my first, so I was negotiating deals for about 2 years, and then I bought 3 units out of a deal that I was selling. And I got a £68,000 cashback on the day of completion of 3 units in the financial district of London, Canary Wharf. And the weekend after that, me and a friend ended up in Monaco blowing 10 grand of that. And the Tuesday I got back, and a mentor of mine sat me down and taught me about the idea of keeping money versus making it, that keeping it being more important. And so I was very lucky in the sense that the 2008 crash in real estate didn't really affect me as much, because I had the resources and the reserves to sort of buffer anything that was going on. But what did happen was that the business side of it, the education side of it, completely collapsed. And so from that point of view, and also we were then teaching people how to invest in the stock market using leverage and trade the markets, etc. And seeing people lose a lot of money during 2008 gave me a check on my consciousness, because it made me realize what I'm doing here. Even though people are losing money and my lawyer is telling me I'm covered because I have terms and conditions signed, I am basically giving somebody a gun and getting them to sign a document that says, I promise to not point this at my own foot and pull the trigger. And they're doing it. And for some reason, I felt an enormous responsibility at that point. And I just decided that I didn't want to do that. I wanted to show people how to actually invest safely and how to do it right and be in the game for a long period of time, not chase short-term returns. And so from that moment, I decided I'm never talking about leverage ever again. I'm never talking about, and I'm talking about, leverage in the stock market. I'm not talking about leverage. I'm not talking about margin ever again. And I need to take a break. I took a year off and I decided that if a business like this is so, it's so affected by a market turn down, I need to focus. The main thing for me is my own investing, number one, just as a, keeping myself secure. And then number two, if I want to teach people, then I need to be responsible in what I'm teaching them, regardless of what the law says, regardless of what the legal guidelines are of what I can and can't do. I need to be able to be responsible based on my moralities. And so I decided to stop teaching leverage, and I created a program on gold and silver, which is what I was investing in back then. During that period, I took a hiatus, and then developed that to try and make safe investing exciting. Figured if I can do it with gold and silver, with the most boring investment on earth, then I could do it with real estate again without an issue. And so Gold and Silver for Life was born in 2010. Then a number of years later, Property Profits for Life was born, and then Stock Profits for Life was born. And then last year, March of 2019, we rolled all of them up into Perfect Portfolio.
Got it. Got it. Well, so it sounds like you've done a complete 180 since 2008. And are you only investing in, the better question is, has the business now transitioned to 100% education with the goal of trying and investing your own money on the side into these things you're teaching about?
Yeah, well, that's the primary goal. It's not on the side. That is my 100% intention. And one of the things I realize, I'm sure you might be able to relate with, and that is with my old business, as I was doing, traditional real estate, as I was focusing more on the education side and that was growing, the traditional actual real estate investing was suffering because you're traveling for 2 weeks out of the month. So it's like, and when the 2008 crash happened, I realized that I'm never making that mistake ever again, because my own portfolio is the most important thing for me. So I didn't want to do that. I didn't want to make that mistake after the 2010 period.
And so tell everyone how you're investing today in real estate versus being an active investor in the past.
Yeah. So now I use REITs. I use US listed REITs, and I use REIT ETFs to invest. Those ETFs also come with a dividend payment. So that's your cash flow coming in. And then I use options to further enhance the amount of cash flow that I'm generating. So the particular REIT, for example, that I like to invest in, it's a REIT ETF. It's called VNQ. It's the Vanguard REIT fund. And in essence, I'm getting, since inception, an 8.48% compounded capital gain. I'm getting a 4.5% dividend yield, and I'm getting an extra 12% a year cash flow based on what I'm doing. The benefit of this is, with one stock purchase on my phone, I'm invested in 8 different real estate sectors across 154 different real estate projects across the USA. So I've got full diversification and full ability to manage it however I want to manage it. And most importantly, I've got the world's best nerds of lawyers, accountants, and financiers making sure that they make me money. Why? Because if the year that they don't make me money, my money's out of there and another 100 million's out of there too. So they've got to make money. They've got to perform. They've got to make these funds perform. They get to deal with all the hassle. They get to deal with all the work. And because of the economies of scale on this fund, on VNQ, I pay a yearly fee of 0.12%
for management, right?
Yes.
Fund management, yeah. Interesting, because one of the big things that we talk about on the show is having direct access to the tax deferment basis on cost segregation and owning directly into real estate versus through a REIT, you're buying a stock and thus you don't get the tax, as much tax benefits, or if any. So how are you figuring that part out when you don't own the physical brick and mortar?
Well, from my perspective, you got to look at it and go, what's the actual goal on what you're trying to do? For me, it's lifestyle. So when I work it out, the added benefit of having the tax deferment doesn't make any sense. And also there are, as you know, based on the conversation we had off screen, there are many more ways to create tax deferment with a stock market portfolio than than being forced to having to do physical real estate. These are basically two different objectives for an individual, and they've got to look at which one they want to do. With the physical ownership, you are going to have extra work, and if you don't want to do that, then forcing yourself to do that and creating a life where you're in that life is a choice that you have. For me, it's more easier to create an alternate tax efficient structure to allow my stock portfolio to grow and have the lifestyle benefits of that.
What sort of advice can you give on the tax deferment issue with a stock portfolio versus a traditional real estate investment portfolio, and then how you're structuring it today?
I really do not like talking about tax. I think someone needs to have the right advisor, and someone needs to be very much in tune with international law to understand that, especially in today's world where, it is the net, so to say, is getting so close in, and it's actually better. The problem with answering this question from my perspective is that I'm a non-US resident.
Right.
And so for non-US residents, it is much more easier to do tax deferment plans and tax efficiency plans than it is for a US resident. Right. The US has the FATCA laws that are at a level which I would not want to be under. And in fact, the US is now the best tax haven in the world for every non-US resident. Because the US had FATCA come in, where basically if you're a US resident and you're hiding money anywhere in the world, you're screwed. So the rest of the world thought, hey, this is not a bad idea. We should all get together and do this. So they came up with a common reporting standard. And then they went to the US and said, hey, can you sign up to this and give us information on any non-US resident? And they said, no, we don't need to do that. So, and that was one of Barack Obama's administration's geniuses, because what he in essence did was put the majority of tax havens out of business. Right. In a big way, because now, where else do you want to put your money besides the USA?
Right. So back with US dollars as well.
Exactly. So any non-US resident can effectively have their money in the USA, have the full backing of the US dollar, and have the secrecy laws that come with the USA, and all the LLC laws and things like that. So I don't like talking about particular structures for obvious reasons. And I think everyone needs to get their own advice to be able to do that in the best way possible.
No, but it's good to give some education and some insight into how that works, and just some fundamental issues that have changed over the years under Barack Obama's administration that have benefited international folks that, particularly like yourself, now look at the United States differently from a tax haven, quote unquote, point of view, because of all these other secrecy laws. So it's very interesting to get a different perspective on it. And I think that's all I needed. So talk to me about how you're educating your students and your clients now about investing in gold and silver. I actually don't think I've ever spoken to anyone on this show about the value of gold and silver. So maybe we can dive into that a little bit.
Yeah, so gold and silver is actually just an inverse asset to cash. And so the logical reason of investing in gold and silver is this: is more cash going to be printed? And if the answer is yes, then you need to have some gold and silver. It's just as simple as that. There's a 92% correlation to the amount of money that's printed and the amount of gold, the price of gold and silver going up. So if we think that more money is going to be printed over the next 15, 20 years, you need to have gold and silver. It's very, very simple. So the problem with gold and silver traditionally are that they are dead assets until you sell them. Mm-hmm. Right? So unlike real estate, you're buying the bricks, you're buying the coins, and they're sitting there until you sell them one day. The problem with that is that's a shit way of doing things, because if you are going to grow wealth consistently, you need cash flow. You need the ability to have liquidity. One of the biggest problems with gold and silver that most people don't realize is that, for example, an investor, in Texas, for example, right, goes and buys some gold and silver. Now, the problem is that when he wants to go and sell that gold and silver, where's he going to sell it? He's going to sell it in Texas. And typically he's going to go around to maybe in a 10-mile radius around his home to sell that gold and silver. Now, what happens if all the Texas dealers get together and say, we're going to offer less than market on this? So he is now screwed. He doesn't have, number one, he doesn't have liquidity. Number two, he doesn't have cash flow, but he's now susceptible to one of the biggest issues with gold and silver, and that is a local market issue. So when I was buying physical gold and silver, when I first started and I didn't know any better, I was subject to London prices. But gold and silver and everything that we do is an international market. So why can't you take advantage of the international benefits that come with that? Now, the good thing is that there are innovations in investing that have happened called exchange traded funds. People don't understand. These are actually innovations that have happened in the investment field. And so you can buy gold and silver via an exchange traded fund, have complete liquidity, have cash flow ability through options, which is what we do, and have the ability to not get screwed when you want to sell that because you're selling it at the true market value. So that's what we do. My main philosophy is this: I want to buy an asset that's going up in value. I want to cash flow it, and I want to take the cash flow and buy more of that asset. Simple. That's all I do.
So talk to me about the type of returns you're getting in today's market on gold and silver.
Yeah, so gold and silver will typically compound at about 8% a year as over a long period of time. Then on top of that, we're generating a 1 to 2% a month cash flow, so that works out at 12 to 26% a year-ish on the gold and silver that we're holding.
From what?
By using options to allow speculators to bet on what's going on with the prices. So my main goal is to own that gold and silver long term. The good thing about the US stock market and pretty much almost any stock market is that you can allow speculators to speculate on what's going to happen to the future price of an asset. A way of doing that is futures, and another way of doing that is options. So we use, on the option side, we allow them to speculate on the gold and silver that we own with certain parameters. And according to the Chicago Board of Options Exchange, about 90% of speculators on options, which is the other side of what we do, end up losing money. So when they're losing money, we're making money. So 90% of the time we're making money and their bets go wrong. And the other 10% of the time we have parameters and rules to make sure that you don't lose your gold and silver at the wrong price.
Interesting. And are they betting and speculating on the gold and silver obviously going up, or that it's tanking, or a bit of both?
Bit of both.
Got it. And obviously that's where the parameters come in. So what is the number one thing that people need to understand when investing in gold and silver from a high level point of view? It's interesting to them. It sounds like you've got a little mousetrap set up in terms of how you make the best of both worlds.
The number one thing that you got to understand is that gold and silver are cash flowable assets. The biggest problem that people have, and the reason why real estate investors and stock market investors shy away from gold and silver, is that they think that these assets do not cash flow. And that is absolutely bullshit. The second thing you got to understand is that using market innovations like ETFs is not wrong. And so there's a lot of fear mongering going on in the gold and silver space that ETFs are bad and things like that. And if you have a look at who's doing the fear mongering, it's people that are selling physical gold and silver, and they have an interest in a business that's selling physical gold and silver. And the reason why they're doing it is because on the first 3 days of inception of a gold ETF, it brought in $1 billion worth of capital because it created liquidity in a market that traditionally didn't have that much liquidity. And so these innovations are putting bullion dealers out of business. And so that's why there's a ton of negativity out there around exchange traded funds when it comes to precious metals. So what you got to realize is these are safe, stable, secure ways of investing in the metal. As long as you are not investing thinking that there's going to be a zombie apocalypse, the best way of doing it is the ETFs.
Got it. And talk me through about you talk about the transition to these ETFs in historically being a local market, and then this when did this ETF come out? When did they come? When was it born?
I'd have to. I think it was 2006 or something like that. I'd have to dig it out.
But it was essentially a reaction to the market of avoiding that localized trading that was going on to not screw the individual person who had a bunch of gold sitting in their closet, right?
Yeah, I mean, at the end of the day, you had people that had so much gold sitting everywhere that it made complete sense to create an ETF so that it could be traded and give you the price exposure of your gold and silver. If your main goal is to have possession of actual gold, fair enough. You've got to own the physical. There's no other way of doing it. But if your main goal, which is what I think most people's main goal is to actually profit from gold and silver, not just hold on to the physical, then there's no better way than the ETF.
Got it. Got it. And then walk us through the actual structure of how it works. Is there an online platform that you go to that you can trade like you trade in stocks and bonds, that you just buy a bunch of gold, buy a bunch of silver, hold on to it as in a bank account online on your dashboard that you can use to then trade up and down using options or futures?
Yeah, you basically do it through your current broker account. Whatever your current broker account is, you'll be able to go and invest in GLD, which is the ETF for gold, or SLV, which is the ETF for silver.
Got it. Awesome, mate. What's the goal for you've clearly come through a lot of evolutions of your business and a growth as an entrepreneur. What's 2020 got in store?
2020 is really about for us. 2019 was another year where we built a foundation part of the business. I go through that every 7 or 8 years. By the way, I just looked up when that ETF was incepted. It was 2004 for you. So
got it.
For me, 2020 is about working with we only work with about 155 people a year. So it's about finding better qualities of those people, getting better at attracting those people, and really building deeper relationships with all of the people that we have under our care. And really, that's what it means to me when someone becomes a client. It's somebody that's under my protection. So we've just got to keep getting better at that. Our strategies will never change. What we do will never change. We are about helping people execute and helping people execute consistently.
Got it. And talk to a little bit about the program and what does it entail? How do you get involved? All that sort of good stuff.
Yeah, so you can go and watch a training webinar, which I'm sure you're going to have the link to in the show notes anyway, so they can go ahead and click on that and access a completely free training. I go through the actual ETFs that we use and things like that and break them all down, so you can have a look at that. Then you go through an application process if what you think is right. By the way, we take more than 50% of our fee after we make you $50,000 in profit. So you're only going to be paying the program price is about $12,500. You pay $4,997 US, by the way, that is $4,997 up front. You get access to absolutely everything, and you pay the other $7,503 when we make you $50,000 in profit. That's the way I like to do things. Once you're in, you go through the trainings. You have a one-on-one coaching call with our head coach, which, by the way, he's been investing his real money, his and his family's real money with the strategies for 5 years. We don't just pay coaches to sit there and read a book and then respond to an email. This guy is one of my best friends in real life as well. So you get a one-on-one coaching call with him. You then get into the program. You have weekly coaching calls on a Monday for life. So you never, ever pay for one of those again for as long as you want to attend. You can take 3 weeks off. You can come back. There's no issues with that whatsoever. And that's it. That's once you get going. We just want to get you going as fast as possible. I believe in just-in-time learning. I actually don't believe anyone learns anything before actually doing it. Right. You might think you know it, but I think you learn it while doing it.
Learning what? No, 100% agree. And does a program require you to have capital ready to deploy into these different gold, silver, REITs, different vehicles that you're educating about?
Yes. So we really don't work with people who are in the process of generating capital. That's not where we are best suited. We work with people that have generated capital or are generating capital, whether it's through a business, a family business or a personal business or a property portfolio or whatever it is, their job, however it is. But you've got to have some capital to be able to work with us. We typically recommend about $50,000 ready to invest, but you can test the strategy for $5,000 until you're comfortable.
Interesting. Awesome stuff, man. Well, I know we're getting to the end of the show. Do you want to dive into the top 5 investing tips?
Yeah, let me think about these.
No, I've got 5 of them for you. So luckily I've got to tell it. So no, I couldn't just throw you under the bus, mate, and say, give me your top 5 investing tips. Number one question. So it's sort of like a lightning round. So it's a bit of a back and forth, but so what is the number one habit you practice to keep on track towards your goals?
Oh, wow. That's an interesting thing. I think it's nothing to do with investing, actually. It's actually fasting. So I think fasting is a very, very good, like intermittent fasting or something like that. It's absolutely fantastic to keep your mind on point.
Do you do that every day, or is it like once a week?
So I do alternate day fasting, which is basically eating for 12 hours, then not eating for approximately 36 hours, and then eating for another 12 hours.
Wow, that's intense.
It feels it feels freaking phenomenal, though. I tell you that.
Really?
Once you get over 3 rounds of it, three segments of it, it feels absolutely phenomenal. I cannot imagine going back to eating every single day.
Are you cutting out any? I'm digressing from the top 5 investing tips, but I'm interested. Are you doing anything in particular in terms of what you don't eat when you do come to eat, like no meats or certain dairy or anything like that?
Well, I've always been vegetarian, but yeah. So I got a food intolerance test done. There's people that believe in those. There's people that don't believe in those. But I got it done, and it said that I was intolerant to cow's dairy and eggs. So I basically avoid cow's dairy. I can drink when I go for a pizza. I'll just make sure that they have buffalo mozzarella instead of a cow's milk dairy, and I feel absolutely completely different. Like I can have a pizza with normal cow's milk cheese versus buffalo milk cheese, and it is a completely different experience.
Interesting. That's awesome. Next question is, who's the number one, or who's the most influential person in your career to date?
Wow. I can't really answer that question. The reason is because I don't believe in mentors for life. I think people should have mentors for goals.
Sure.
So I really cannot answer that question, because at every stage of my life, I've wanted to do a different thing, and another person has been the most significant person.
Right. No, I completely agree with that. But I would have thought it would be your dad, because it was that influential moment that you were able to prove to him that you could negotiate in a better way, and he challenged.
That's an interesting thing. I mean, yes, but I was never actually going out to prove anything to him.
Right.
And I think that's why it worked.
Right.
I already knew I could do it. I just had to figure out how.
Got it.
I already had that, that asshole inside of me that knew I was better than anything else. Right. So I already had that. And so I was never trying to prove it to him or trying to prove it to anyone else. I was mainly trying to prove it to myself.
Right.
So yes, the most influential moment in my life absolutely was the moment where he said, "Well, show me," rather than screw off, basically.
Awesome stuff. Being a tech guy, I'm sure you have an influential tool in your business. What is it?
An iPhone.
An iPhone. Yeah, thought it would have been. You mentioned it 2 or 3 times on the show already today.
Yeah,
So.
iPhone. I think it's the best innovation ever to come out. Unfortunately, most people are using it for what it shouldn't be used for. I'm not into social media or anything like that. You will not find me on Facebook, on Instagram, on shit like that. I just am not interested in any of that whatsoever. But the iPhone, I can run pretty much my entire business on that. And the only other thing I need is the MacBook, which we're talking on right now.
Right, exactly. In one sentence, what has been the biggest failure in your career, and what did you learn from that failure?
I lost $100,000 in 3 days once.
What was the learning from that?
Greed and fear. Yeah, master the greed and fear, which is why now when people go through our investing programs, my main job is to get their nervous system ready for investing. It's nothing to do with the strategy. There's not too many, as you know, there are not too many strategies that you can use to make money. It's very simple. Making money is freaking simple. It's the mindset, and it's the reaction that you have to what gets thrown at you that's going to determine whether you can actually do it or not. And so my main goal is to coach people's nervous systems so that, when the market is down and they're looking at a red on their account, they don't overreact and start selling things. Or when the market is up, they don't get too celebratory and start spending more money. It's just things like that.
Interesting. No, I think it's that 80-20 rule, right? It's 80% mindset, 20% doing. So awesome stuff. Mate, last question. Where can people reach you if they want to learn a little bit more about what you do, the courses that you teach? Where do they go?
To be honest with you, the best thing they can do is go into your show notes and just go and access the trainings, because that has everything in there. I go through the ETFs, I go through the strategy, I go through what we do, and everything's in there. So you can get a complete understanding of everything. And like I've been saying, what we do, what we sell, the important part of what we sell is not the strategy. We give a lot of it away on a webinar. You can actually go watch it and work it out and do it yourself. What we specialize in is the coaching, the support, and the execution of that strategy. That's why we have clients in 46 countries. That's why we've been doing this since 2010 without changing the strategy once. That is what we specialize in, and that's who we want to work with. The strategy is the strategy is the strategy. You know, I'm pretty sure that the strategies that you lay out in your books, if anyone really paid attention, they could go and do it.
Sure.
Right?
100%.
It's exactly. And it's not about the strategy. It's about actually doing it. That's what we want to help people with.
It's not rocket science at the end of the day. It's just about learning the basics. That's the constant. The variability is you as the person, and how you talk about mindset and the fear factor of when things go red or things go green, and not to overspend or not to panic buy, or panic sell, I should say. Well, mate, look, I really want to thank you for taking some time out of your day to jump on this show. I want to just quickly summarize some of the big things that I took away from today's show. I think the one thing that you said, it's easy to sell something that is true on a spreadsheet than bullshit. What you said earlier, I think it was sales are easy when you don't have to bullshit. I think that is completely true, and that means that the product's got to be good, the investment's got to be good, and it speaks for itself. So you're not actually selling. So sales becomes really, really easy. And I think the power of negotiation that you learn at a young age is really important to help you set, your career that you're on today and the business that you've created, because that is really important. The negotiation tools and understanding, going back to that no BS attitude, and what a deal's a deal, and this is what I'm going to offer for it, and let it sell it for itself. So I think those are the two big things that I've taken away from today's show. And the last thing I think, which summarizes it all up, is keeping money versus making money. And changing your mindset around that was probably pretty influential in your career growth, from what I was hearing, that you pivoted a few years back to then train people and have a morale that you want to train people about, keeping money rather than just making it. Did I leave anything out?
Yeah, no, I think you covered everything very well. I think the only thing I want to add is just a message to anyone who's watching this, who's sitting with cash on the sidelines. You have no idea how stupid you are being by having cash on the sidelines, thinking, hoping, whatever you want for a market crash. We are not going to see a 2008 style market crash in our lifetime. Statistically, those come around once every 70 years. We've seen one already. Right now, in the US is the best place to invest. However you do it, you need to get that cash freaking invested, because right now we're entering the prime spending years of millennials, which means that stock market, real estate is going to go up until about 2035, and you are going to kick yourself if you are not invested. The crash that everyone is going on about, the slowdown, the economic weakness, all this other shit that all these fearmongers are talking about has already happened. And you've only got to bring up the chart, the S&P 500, and look at it from 2018 to the end of 2019 to see that the market went absolutely nowhere for a period of 20 months. That was your slowdown. It broke up in end of 2019, and now we're on a trajectory of upward growth in the markets, and that's going to include real estate, and that's going to include the stock market, and subsequently that will include gold and silver. Gold and silver will not go up just because the stock market crashes. The only time gold and silver skyrocket is when there is a dollar crisis, and we're not going to see one of those for a while. So therefore, gold and silver will go up, but for the simple reason that a big hedge fund like Ray Dalio's Bridgewater, that's got $100 billion under management, as that 100 billion turns to 125 billion, they've now got to reallocate some more of that 25 billion to gold and silver based on their arithmetics. That will increase the demand of gold and silver, and that will push the price of gold and silver up while the stock market goes up. So right now, the worst thing that you can do is be sitting in cash. What I'm saying does not mean that there won't be a pullback. There will be a pullback. There's a correction every 12 to 18 months. This is standard. There is nothing scary about that. Those are buying opportunities. The key thing is you've got to be invested. The worst thing you can do is be in freaking cash right now. Absolute worst thing you can do. And stop believing the fearmongers. They've been absolutely wrong consistently, and they're really not worth listening to as of this point.
Mate, beautifully said. Absolutely beautifully said. No, I think it's really important that Yeah, sitting on the sideline. I've also heard the exact same sentiments from a lot of people on this show about it's already kind of the slowdown has happened, and whatever slowdown is around the corner has already really occurred, and it will happen again in probably 5-6 years time. But the lifetime slowdown we had has already occurred in 2008 and 2009. And I tend to agree with you that, the last time was the Great Depression back in the late 20s. So hopefully it's the roaring 20s of 2020s now, and we see a massive, massive growth. But again, mate, I want to thank you so much for taking some time out of your day. Enjoy the rest of your week. Enjoy Colombia, and we'll catch up very, very soon.
Thank you so much, man.
Well, there you have another cracking episode, jam-packed with some incredible stuff from Minesh and his incredible journey all the way around the world, and how he's learnt about the different investment strategies, about keeping your money versus making money, and about how it's slow and steady wins the race. These are not complicated things that he's talking about. Please don't be a fool in your money. So if you want to find out a little bit more about Minesh, on my website, there will be all the links to his all his webinars and all his great information. So please jump up onto readgoossens.com and make sure you click on the podcast tab. And we're going to do this all again next week. So be bold, be brave, and remember, go give life a crack.